GTii continuing the upside we were looking for. Now, I know a lot of you have actually been waiting for me to say this, but the statistical play, if you know, you know, it technically is on. All right, let's go ahead and find out those details. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTii, technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's dive right into the charts. Okay, so yes, we are looking at GTii in the hourly time frame here, and we're going to start off the short-term time frame analysis, particularly with the Crypstex ARC-Series indicators. Okay, you guys, so this indicator that we are looking at in particularly is called ARC Armor, and this indicator is comprised of several exponential moving averages placed together very close in proximity. Now, it is algorithmically placed within the chart so that we can get a type of wave of motion or a directional wave. Okay, so you can see actually what it's doing. In providing those waves, we actually do get buy and sell signals, or short and long, if you will. So for example, you get a short here, it goes down. You get a long, it goes all the way up there. Short, you get a long, you know, and so on and so on. Okay, so for example, down here, it did flash a long signal first of all, where we called that very bottom at about 45 cents, where I thought it was going to be 47.38. Okay, so it did flash that long signal. We got a short-term scalp down here. We actually got another long signal, and it has since continued to the upside into what looks like it's forming into what I don't usually like to call. I don't usually like to say, but it's a bull flag here. Okay, so a very good thing happening for GTii. Let's look at another ARC-Series indicator, and this is actually the enhanced MACD, which is actually a momentum based indicator equipped with Bollinger Bands. Okay, so you can actually see that the tightening and tightening and tightening started happening. The contraction happened down here as we were approaching that very downside that we were saying we were gonna bounce strongly from, and it finally expanded. Okay, so those, as you can see, the Bollinger Bands are expanding even still. Okay, so the upside continuation is very likely, but we do have to go over a few things. Okay, so I am still following the playbook rules no matter what. Okay, because the statistics are playing out right now, and we do have to honor every single little tiny nuance and sign that we get along the way. Okay, if you are interested in acquiring any of these indicators, actually it's a set of 8 indicators. Okay, so you can see them here. So there are several of them, and you can actually just send me a DM on Discord or Twitter, and we'll go ahead and talk about how to acquire those indicators. Please know that the subscription that you get through TradingView does not include visibility with these to these indicators. Okay, as these are actually a private list set out within TradingView. Okay, so Crypstex, they are authors of these indicators, or the indicator codes, and they are also authorized retailers within the TradingView space. Okay, so know that a TradingView subscription does not grant you access to this private list. You do have to go through me. Make sure to send me a DM, and we'll go over those details. Okay, you guys. So let's go ahead and move on to the next chart, as this is very exciting for GTii. Okay, so please remember that along this way up, you know, that I was bullish, but the thing is that I kept on telling you that careful, as we see these long wicks to the upside. It just usually means that the asset is in shock, and when the asset is in shock, is just particularly to weeks and weeks of downtrend that we actually saw, you know, and we actually looked at since we were at about $5. So when we were at about $5, we actually saw that continuation to the downside, and it has since happened. Okay, so now this type of recovery that's happening right now is a tough recovery. Okay, you guys. So there are some short positions getting pressured, and I can see already some short positions getting a little bit squeezed out, some stop losses already getting triggered, and the continuation onto the upside has been constant and consistent. Okay, so now a very, very, very important thing here to notice. Okay, so this is both bullish and bearish at the same time. Yesterday, I did say that we were going to face a retracement. We did get that retracement, and I said it was also going to be a small pullback. Okay, so please take a look at the dates of the candles. This is the dates are down here. Okay, so this is the date from 12/21, and this is right here 12/22. We closed this candle. You can see the values up here. We closed that candle at 80.73, which is right about right here, okay? It's a little hard to reach it. 80.73 was where we closed it, and you can see we faced that small pullback, okay? That small pullback was literally where I said we were going to go. We actually pulled back right to the moving average. We catch up to the moving average, and we continue on to the upside. So we had two of them to look out for. First of all, as you can see here, this candle found support at our SMA 10 and the EMA 7, okay? So these candles have actually been finding support at the EMA 7, and it could likely happen once again. And the reason why I can say this is when we're at the top of a trend and we print this inverted hammer, this is usually called a shooting star, okay? So this type of shooting star doji can actually present a temporary retracement. So please know that we do have supports, first of all, at 79.47, 79 cents, of course, and 71.04 that we can use for a continuation onto the upside. Okay, I'm not saying that that's a guarantee, and the reason why I am not so certain in calling the downside just yet is particularly because of this tiny nuance here. This is the 50-day simple moving average. Actually, let me make sure it's not the 30. Actually, sorry, yes, it is the 30-day exponential moving average, and it is actually right below us. Okay, so the 8-hour candle, the 8-hour candle closed today at about 95 cents, actually exactly 95 cents, and you can see that the SMA 10 is sitting at 94.66. Okay, so this is a form of support that we have. It is very close to the support, which usually presents a likely failure of it, but just know that every single time that the candles retrace back down to a support level or a relevant moving average, it's just another loading zone for another person to catch the ride to the way up. Okay, you guys, the next move that we have on the upside, and this is a pretty large one, okay, so don't take this too into consideration, but I can see a potential $1.34 in the coming days, okay, and that is particular to the 50-day simple moving average. Another thing that we can do is we can take a fib retracement from the swing high of that 8-hour candle to the swing low of that candle itself, okay, and actually you can see that we do have a resistance range. Now this resistance range has a value of first of all, starting from, let's see, yeah, I would start it right from the SMA 50, which is in confluence with the high of this candle right over here. Take a look. When you see, hold on, there we go. You see this print here, it says 134. Here's the candle wick high from December 2nd, and look at the trend line. You can see it touching right at that 50-day simple moving average. That is going to be our first area of resistance, and we can actually see a retracement, temporary of course, between between the SMA 50 current location, which is very close to the 2 fib at 3110, at 131.10 to be exact, and the 2.618 at 144.69, which is why I'm saying that we could potentially look at that top target of about $1.34 in the immediate short term, possibly 2 days. But just don't take these as a certainty. It's just per the playbook, not including FOMO, not including any psychological components. Just pure raw, just literally raw price action. Okay, let's move on. Pardon me. Okay, so yes, this is the this is the capitulation chart that we've been seeing for some time. We are riding this descending channel, which usually presents a reversal. Okay, so in this case, we can actually see that we've continued on to the upside, and I did mention to you that the closure of the 5-day candle here was incredibly important, that we did close it as a bullish hammer, and we have since done that. Now, what I also mentioned is that the next candle does have serious implication here, okay? So this has to be printed as a bullish candle, okay? So particularly if we can have the body right up here close in about 6 days. It's 6 days because it's including the weekend, right? So it's gonna take that extra 2 days, 6 days, 17 hours to be exact. Okay, so Yeah, we definitely need this closed as a bullish type of candle. Okay, so that bullish candle can actually be right at the resistance top which actually we use today of about, let's see, $1 and about 2 cents. So if we can close this candle at that value, or of course higher, then yeah, we're gonna that would be the confirmation candle that we are continuing on to the upside. So this is already looking very good for the GTii asset, and we're also at the resistance of the newly converted. I'm sorry, it's actually not even converted yet. It failed it just a little bit, but that's normal. Okay, it did fail the resistance from the channel itself, but we knew that we were going to be able to find resistance within this box here, and you can see that the candle literally opened right at our box of resistance. Okay, so we are moving according to plan. I know that it's taken a long time. I know GTii has been in the red for a while, so but please, we do have to practice some patience, as this is going to be a choppy way up, as I have mentioned before. Okay, we do have some good fundamental catalysts coming in, so not a problem there. Now, the long-awaited statistical thread of analysis is here. Okay, so this, I'm going to explain it once again. So this is critical information, okay? So I have taken a test of volatility versus momentum. This is applying statistical physics, okay? So in this case, we can actually, well, you know what? Let me start off from the beginning. New viewers, this is volatility you're looking at, represented by this indicator BBWP. BBWP, or volatility, is direction neutral. We pair it with stochastic momentum, okay? So in this case, stochastic momentum is an indicator that is proprietary to TradingView software, which, by the way, the link is actually in the description below, since I have been accepted into their affiliate program. So you creating an account with TradingView actually does help me out. Please do so, okay, you guys? So now the back test actually consisted of a few factors, okay? So anytime that volatility has actually expanded into critical in the critical zone, which I consider to be anything above this 90% line here, the red one, anytime that we have gone into that critical volatility loading, I have taken note of that iteration's duration, the upside thrust based on that iteration, and also the amount of times that the iterations have guessed the upside correctly versus incorrectly, particular to the volatility versus momentum profile. Okay, so in this case, the results that came back were very, very substantial and very ideal. Okay, so in this case, we are looking at a total of 11 iterations, of which volatility versus momentum have guessed the upside correctly 7 out of those 11 times, giving us an upside accuracy of 68.63% with an averaged upside thrust of a massive 3,202.47% over the span of 32 and a quarter days. What I'm basically saying here is that the statistics are now on. Okay, so now this average move, please know that it's not a certainty. It is a statistical average based on all of these iterations metrics. Okay, so based on all of these metrics, the statistical mean is actually leaving us at a 3,200% upside thrust. Know that within these iterations, one of those iterations was just a 34% upside. Okay, so one of those was a couple of those were 100. One of those is 300 right here. You can actually see the 40% right here. One of those was a massive almost 19,000. One of those was 1,600. So look at 107% here. So know that there is variance within that statistical metric. Okay, so what's very important here, and finally I can explain to you guys what we've been looking at for quite some time now. I can explain it for you very clearly now in plain English. Okay, so we've actually talked about this so many times, and I've had so many questions regarding this, so now I can finally give it to you the right way. Okay, so in this case, we have been needing the requirements. Okay, I'm talking about the criteria, the condition that needs to be set in order for us to make that massive upside move is this. The volatility component of BBWP, which is the spectrum line, needs to be within the volatility, the critical volatility zone, alongside the moving average. Okay, so we are now within critical volatility. I would really like for this to start printing red bars like this. It is in my preference for that, or a huge top, for this to max out and then start the contraction phase. I would love for that to happen first, okay? But it is not needed. I'm saying that it's, man, this is hard for, I don't want to confuse anybody here, okay, you guys? The prerequisites have already been met, is my point, but my preference to actually meet a higher percentage from that statistical value are the ones that I'm talking about, okay? So I would love for us to start printing these red bars. In this case, these bars represent a 3-day read, okay? Every 3 days that the volatility was at expansion here, then it actually printed a 3-day read at max. Okay, so in this case, you can see that the bottom line criteria that we needed was the momentum pitched to the upside. And I have actually been telling everybody that that momentum has started to shift starting from up here, which was on December 2nd. Yes, it does take a long time. And I did tell you guys literally up here that this is likely going to take weeks. Okay, so this is a very strong move. We're not about to just explode to 3,000% out of nowhere. Okay, so we've been looking at this move. We've literally been looking at this move possibility for now about a month. Okay, you guys, so now that move is in play. So we can actually apply that statistical variable and we can actually imply a destination based on that statistical value. Okay, so if we were to make that 3,200% move to the upside, we can actually see that it gives us now, actually, hold on, now that we do have this, the criteria met, let's go ahead and take the measurement from the firing of the signal. Okay, so the firing of the signal could arguably be right over here. Okay, so we can apply at the opening of this candle here, the tiny little one right there. Okay, so we're gonna apply that upside metric from this candle. So now this is gonna change. Our previously implied $70 or $68 is gonna be different now. Okay, so let's go ahead and take that 3,202% to the upside from the opening of that candle. Okay, so actually I'm gonna take the measurement from where that candle currently is sitting. Okay, so from right here, a little closer. So 3,202% actually takes us to just about $18.25 from the firing of the signal itself. Okay, so you're looking at about $18, which is absolutely in confluence with this top trend line here. Okay, so yes, we have been talking about $70, but that was always an implied or a type of an estimate, right? But now that we do have an official firing with this pivot right here, we can locate it right at this candle, so we can apply that upside metric starting here. And as you can see from this candle, that upside has started. Okay, so it is going to be a choppy way up, but I am expecting if the metrics play, the 3,202 spot 47%, if they play out correctly, about $18. Okay, so this is gonna take, again, it's gonna take weeks unless this thing just FOMOs to the top like this. Then there you go, we actually met the statistical value right on the money. Okay, so now let's move on to the last chart. So this is actually still continuing to the upside, and the RSI is still suggesting an upside continuation here. Okay, you guys, so this is actually 3 drives of phantom bullish divergence that did print on the 12-hour chart, which is very, very good. Okay, so phantom hidden bullish divergence happens when momentum is making an higher high and price action is making higher lows. As you can see here, this is actually pivoted towards the downside, and so is this drive right here. So we did get those drives, and we did notice that we were going to get an upside literally from here, and it has started its ascent. Okay, very, very good for the GTii asset. Okay, so now let's open up a multi-pane so that we can gauge a true bias for that direction in the immediate short-term time frame. We'll start off with the 30-minute. New viewers, these are the RSI properties that I would like for you to look at. Okay, hone in on these 4 zones as they're located right over here. Okay, so immediate short-term time frame, 30-minute, is well within the grips of the bull strength percentile. Okay, so the only thing is that I would like for us to reclaim the upside of this moving average. So the moving average is a 14-day period. Okay, and the purple line represents an RSI signal. This is actually a bearish thing when we're below the moving average. Okay, but know that the positioning of the RSI is within the grips of the bull strength percentile. So we could likely face a little bit of a retracement and then a continuation onto the upside. The bi-hourly is also suggesting a small retracement as well. Please notice that the moving average has been used as a form of support before a continuation onto the upside. So it is kind of a guide, okay? So this looks like we're going to potentially come right back down, meet the moving average and bounce to the upside again, which by the way is very much in accordance to what I'm talking about within this chart here. A potential retracement back into the testing of the EMA 7 at about 79.46 and or the 71.15 located at the 10-day simple moving average more than likely could be the EMA 7 at 79.36. Okay, so now the 6-hour time frame is suggesting an aggressive upside and has now entered the very grips of the bull weakness percentile, suggesting a continuation. Okay, moving average is also pivoted towards the upside. Very good looking for the 6-hour time frame. Also, the daily time frame here is suggesting a continuation onto the upside. Significant thrust. We are actually very much in the shallow areas of the bear strength percentile, which always means or typically means actually a gravitational pull into the following zone. Okay, so this is very likely. Now finally this daily moving average from the 14-day period of the RSI is now starting to pivot towards the upside as well. Let's look at the bi-daily. Bi-daily upside about to make a bullish cross above the moving average, about to reach the shallow areas of the bear strength, which means that gravitational pull into the following zone. Look at this. Right at the 3-day is actually right at the border, suggesting a continuation onto the upside. 5-day still suggesting a slight upside here. So it's a little weak in the pivot, but it's still suggesting upside. Let's look at the weekly. Weekly still suggesting upside, now entering the bull, the bear weakness percentile, and bi-weekly still suggesting upside as well. You guys, this is a multi-day upside that I am looking for GTii. Okay, so like I said, the statistical value is now in play. Okay, this is the moment that I've been talking to you guys about for weeks and weeks. Okay, I don't know how the CRTD thing and GTii fundamental thing came into play. I don't care how that happened. I was looking at this move for literally weeks ago. Okay, it doesn't matter that the fundamental catalyst is in play. I don't care. We've been looking at this literally. I kept on telling you, we need both of these up here and we need these pitched to the upside, and it's almost there, almost for weeks, and now it's in play. Okay, so let's go ahead and practice some patience. Make sure that we do have our longs secured. Make sure that we do have those stop losses in. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, and I can't suggest for you to sell or buy any assets. Okay, you guys, I need you to do your own DD and everything will be just fine. Very smart people here watching me. I enjoy and I appreciate all of you. Okay, you guys. So with that said, please refer to the links in the description below if you would like to consider joining the ARCap trading community, or if you want to say hi to me on Twitter. If you have any questions or concerns, that is there at your leisure. Okay, you guys. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.